Overview of ASPE and IFRS, bookkeeping relevance in Canada. In Canada, financial reporting standards play a critical role in how financial information is recorded, organized, and presented. While accountants are primarily responsible for preparing financial statements, bookkeepers must understand the accounting framework their organization follows. Two key standards dominate Canadian financial reporting: ASPE and IFRS. Understanding the differences between these standards helps bookkeepers maintain accurate records, support compliance, and produce reliable financial data for accountants, management, and regulators. What is ASPE? Accounting Standards for Private Enterprises, ASPE, is the accounting framework used by most private Canadian businesses. ASPE is designed to be practical, cost-effective, and less complex than public company standards. Who uses ASPE? Privately owned Canadian corporations. Owner-managed businesses. Family-owned companies. Private enterprises not publicly accountable. ASPE focuses on meeting the needs of business owners, lenders, and tax authorities rather than public investors. What is IFRS? International Financial Reporting Standards, IFRS, are used by publicly accountable enterprises in Canada. IFRS is a globally recognized framework intended to ensure consistency and transparency in financial reporting across countries. Who uses IFRS? Publicly traded companies. Companies issuing public debt. Financial institutions. Organizations with international stakeholders. IFRS emphasizes fair value measurement, transparency, and comparability across jurisdictions. Why ASPE and IFRS matter to bookkeepers? Although bookkeepers do not set accounting policy, their daily work must align with the applicable reporting standard. The framework used affects how transactions are recorded, what supporting documentation is required, how adjustments and accruals are prepared, the structure of the chart of accounts. Accurate bookkeeping ensures that financial statements can be prepared efficiently and correctly under the chosen standard. Key bookkeeping differences between ASPE and IFRS. Revenue recognition. ASPE allows simpler revenue recognition methods with fewer disclosures. IFRS requires more detailed tracking of performance obligations and timing of revenue. Bookkeeping impact: more detailed invoicing, contract tracking, and deferred revenue entries under IFRS. Asset measurement. ASPE primarily uses historical cost. IFRS often requires fair value measurement. Bookkeeping impact: additional documentation and adjustments may be required under IFRS. Leases. ASPE allows operating leases to remain off the balance sheet. IFRS requires most leases to be capitalized. Bookkeeping impact: more complex asset and liability tracking under IFRS. Financial statement presentation. ASPE offers flexibility in presentation. IFRS requires standardized formats and disclosures. Bookkeeping impact: more detailed account classifications and consistency under IFRS. Choosing the right standard. Most Canadian small and medium-sized businesses use ASPE due to its simplicity and lower compliance costs. IFRS is mandatory for public companies and beneficial for organizations with international operations or investors. Bookkeepers should always confirm which standard applies to their organization and ensure records are maintained accordingly. ASPE and IFRS set the foundation for financial reporting in Canada, and both have a direct impact on bookkeeping practices. While ASPE emphasizes simplicity and practicality, IFRS demands greater detail, consistency, and documentation. Bookkeepers who understand these frameworks play a vital role in maintaining accurate records, supporting compliance, and facilitating high-quality financial reporting.